Hello everyone. I'm a great fan of Warren Buffett. He has contributed immensely towards investing community by sharing his experience and his psychology. But it doesn't actually help the retail investors. Let me prove it to you with certain examples. One of the great idea from his investment strategy is compounding. But let's look at why it doesn't work in a retail investor's favor. One of his favorite quotes is stocks are nothing but businesses with compound earnings over time. Sometimes stocks may be trading below the intrinsic value, which gives us an immense opportunity. The idea looks great in paper, but it doesn't work in retail investors' favor. Let me prove it to you. We are looking at the earnings of one of the greatest companies in India, which was having a profit after tax of 20,000 crore in 2013, and in 2021 earnings has compounded over time, and it is having a profit of around 50,000 crore. But let's look at the share price. In 2009, it was 538 rupees, and in 2017, it was also trading at 538 rupees, which is around 8 years of time. The share was still trading at a 0% return. Obviously, they would have given a certain dividends which may contribute to around 10%, but over an 8-year period of time, it would have given only 10% return. Let's say somebody has picked the stock correctly and has invested 1 lakh rupees in 2009, and let's say he waits for 2 years or even 3 years and he looks at the stock price. His overall portfolio would have been either flat or it has been down slightly by 5 to 10%. Now he would be an investor who is ready to wait over time, but time here is not fixed. It is not guaranteed that you will get your returns in 10 years or 20 years. You cannot determine it. But let's say he is waiting for 3 years, his stock is down 10%. So, what he would be able to say to his wife or his family, they would come up with other ideas like, look at your neighbor. They have invested in a land, they have made a good profits of at least 30 to 40%. What would you say to them? You would give in and you would sell the stock and then you will invest somewhere else. Let's say Raju, who invests 1 lakh rupees in PSU funds during the same period for a 9% interest rate over an 8-year period of time. Let's just guess how much profits he would have made during that same period. For a principal of 1 lakh, he would have made almost a profit of another 1 lakh rupees during the same period. During that period, Reliance was trading at an exactly same price during the same 8 years. Stay tuned to this video to understand how retail investors can overcome this kind of drawbacks. Let's look at some of the other drawbacks which the retail investors face. The next is the value trap. One of the golden advices by Buffett is price is what you pay and value is what you get. But the retail investors, in the name of value hunting, go into multiple penny stocks and lose tons and tons of money. You may be thinking this may be very few of the retailers, but 90% of the retail traders lose money in the value trap. Let me prove it to you with data that retailers do lose tons and tons of money in multiple penny stocks. Let's look at some of the junk stocks which are trading in the market. Let's look at Jayaprakash Associates. Out of the 61.79% available for the public, 58% are held by the retailers, which is almost 94% of the shareholding, which is a company which is in NCLT, which is going to go bankrupt without a doubt. And look at Vodafone Idea. 83% is held by the retailers. People think Vodafone Idea is trading at 5 to 10 rupees. How much can they lose? They can lose almost everything, whatever they invest there. And look at other junk companies as well, Reliance Infra, Suslan Energy, and the list goes on and on and on. There may be one company out of maybe 100 company which goes into revival and people do make multi-baggers. I'm not denying that. But retailers think that they can make multi-baggers and they think they are value investors and invest into a lot of junk companies and they lose all the money they have. Let's look at the thought process behind the retail investors. Let's look at Jayaprakash Associates for example. They think that the stock was once trading at 300 rupees. Now the stock is around 11 rupees. If we buy 1000 shares, let's say if it goes back to 300, we are going to be an crorepati. But what actually happens is it goes to zero and it will get delisted from the market and people will lose all the money they have invested. This is one of the key reasons retail investors lose money in the market. Let's look at some of the other reasons why retail investors lose money in the market. One of the other key reasons is volatility, in which retail investors will not be able to hold their psychology. One of the great advice by Buffett is even if the market is closed for 5 years, you should be comfortable in holding the stock. Let's look at HDFC Bank. During the corona crash, it went to almost 750 and then it came back to 1000. Let's look at the shareholding pattern of the retail investors. Retail investor wanted an exit after the corona crisis, and when the stock rallied back to around 1000 rupees, the shareholding pattern of the retail investors came down by 4%. If they have thought that HDFC Bank is a value prospect and they can hold the company for 5 years, the retail investment should not have come down by 14%. This shows the mindset of retail investors. They want a quick entry and a quick exit. This is something which the retail investors cannot follow. Human behavior remains the same. Only few investors will be actually able to stay calm even during the disaster. Considering all the possibilities of losing money for the retailers, let me give you some of the solutions which would help us in overcoming these drawbacks. Hedging, one of the most powerful tools in the market, which the retail investors rarely make use of. Hedging is nothing but building a fence around your portfolio, creating a good rental income on the shares which you hold without much additional cost on it. It looks easy on paper, but it requires certain knowledge. Some of the strategies which the big boys use is by pledging the shares, they get margin on it without any interest and they initiate covered calls. This is one of the plain vanilla strategy which retail investors can easily do with a capital of around 5 lakhs. It is possible to do it and make a rental income without much additional cost on the actual portfolio. This is one of the ideas which we are sharing, but to actually perform these strategies, we will be sharing a series of videos in our channel. Do subscribe to our channel and stay tuned for further updates on the strategies which will help us in making good income and keep our psychology intact. Thank you for watching. Hope you enjoyed the video.